Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope everybody's having a great weekend. Last week we did see the second largest bank failure in US history with Silicon Valley Bank, and although the consensus is that the risks around this will be contained, it did help to catalyze a major breakdown in the S&P 500. And so going into this week, I do favor those risk-off setups as US equities look like they're going to be heading lower next week. Okay, so quick look at the economic calendar, because this piece of data coming up next week is what you want to pay attention to. It's the CPI data out of the US, and the dollar pairs are unlikely to do much until this is released, and we're probably going to see the dollar pairs really starting to move from Tuesday onwards. The two markets that I do really like for a post-CPI opportunity are gold and silver, because they're both structured in opposite directions, and we can have that reactive playbook with gold and silver based off of this CPI data next week. And we also have the EU interest rate decision on Thursday. So again, euro pairs may not do too much leading into Thursday. The only thing that makes me think we might see the euro pairs moving is because the euro is 57% of the dollar index, and we have that CPI data on Tuesday. So my base case is that all of the markets really start to move from Tuesday onwards once we get this data out. But do not be surprised to see the euro pairs, kind of doing not so much or moving sideways into Thursday. If they do, you know why? It's because of this. Okay, so if we look at the scores heading into next week, you can see that there were huge changes that took place last week. And I warned in last week's video that last week was a big week for risk event. We had 3 interest rate decisions, we had non-farm payrolls, and we had Jerome Powell testifying in front of the Senate committee. So there was a huge amount that went on last week, and it did start to catalyze the markets. Markets which we've seen have kind of been neutral. We've started to see things happening now. And going into this week, the first thing to pay attention to here is the Swiss franc. The Swiss franc is the best long play heading into this week, and I do favor CAD franc, Aussie franc, and also New Zealand franc as my 3 top markets to look for short-term trading opportunities in this week. Outside of that, we're also going to look at pound CAD, pound Aussie to the upside, pound New Zealand to the upside, and also we can look at the euro pairs, EurCad, EurAusd, Euro-New Zealand to the upside. I prefer the pound pairs just because the euro has actually reduced its score slightly. And going into next week, again, the dollar pairs are most likely going to start to move from Tuesday onwards, depending on what happens with that CPI data is likely to determine the next moves in the dollar. But the commodity currencies here versus the franc, versus the pound, versus the euro, they should all underperform in a risk-off environment, especially if we continue to get US equities lower. This is going to bring more risk-off into the markets. And the most noticeable thing here with the scorecards is the outperformance of risk-off currencies versus the Canadian, the Aussie, and the New Zealand, the commodity currencies down in this area. Once you start to see the risk-off currencies, the franc, the yen and the dollar and the yen, they're not quite there yet. But once you start to see those pooling on the left-hand side and you see the commodity currencies pooling on the right-hand side, that is when you know you're getting real risk off in markets. And we haven't had that for quite a while. We've kind of had a more stagflationary play where we've had high inflation, low growth. So last week was a big jump towards a more deflationary outlook in the Forex majors. Although we're not quite there yet with the dollar and the yen, sort of bullish to neutral, so not super bullish. But keep your eye out over the coming weeks for the dollar and the yen to actually move higher up in the scorecards. And this is going to confirm that we are starting to see real risk off coming into the markets. Okay, so let's have a look at the individual currencies, starting with the dollar, and we're on the daily chart here. And what's very, very interesting yesterday was the dynamics in the currency markets. We've already looked at that breakdown in the S&P 500, that catalyzing of the push lower in US equities. And when you get that very often with risk off, you see, yes, the Swiss franc jumping, the Japanese yen, but you also see a flight to safety in the dollar. However, Yesterday, we did not get that. We had a dumping of the US dollar, a liquidation here of the dollar. And this actually was quite disconcerting to me yesterday, because the time when you usually see that is just before a market crash. Usually you see the dollar whipsawing, liquidating, and then you get a major spike in the dollar. Now, I'm not saying the markets are going to crash. I'm just simply highlighting the fact that we had real risk off coming into markets. We had the US equity markets breaking major breakout levels to the downside. And in a normal kind of risk off, you would expect the US dollar alongside the Swiss franc and the yen to benefit from that. But we saw a knee-jerk liquidation of the dollar as that happened. And again, like I said, that was disconcerting to me yesterday. I would strongly advise you watch this very closely. Yes, we've got the CPI coming out next week as well, but it is something that you do very often see before a bigger flight to safety. So just keep an eye on that. Overall, though, technically, you can see we are back above the 7 and 2 year breakouts, and at the moment, we're just consolidating. I am looking for the dollar to go higher. And again, like I said, what was disconcerting to me yesterday is the dynamics of this, the way this played out. As we got real risk off coming into the US equity markets, I question whether we're going to get a snapback, a strong snapback in the dollar next week to the upside. Next is the euro. As you can see, with the euro, we had that gapping higher and we pushed up in euro futures here. And again, this was off the back of that dollar liquidation, which is not what you would want to see normally with risk off. And usually you only see the dollar doing that before, as I said, a major flight to safety or even a market crash. So again, please just take this for what it is, which is just information. It's an observation of the price action which took place yesterday. I'm not saying the market's going to crash. I'm just saying that is what happens before a crash. So it was interesting that we saw those dynamics in the liquidation in the dollar yesterday. Overall, though, I do think this is going to probably not do much until CPI, and CPI is likely going to dictate what happens next in the dollar. Next is the pound. We did fail previously at the major highs, and this was this major double top here. We actually broke the low, and this looks like this knee-jerk reaction where we got the liquidation. You can see, and this is what's also very interesting, is yes, as I said, usually get that kind of dollar liquidation, that knee-jerk sell-off before a snapback or whipsaw on a bigger flight to safety. And you can see if this double top is correct, now we've broken the low, the next move down in the pound, you would think would be back to the previous low. That is what you would expect to see with this kind of double top in an overall downtrend. So it is interesting to me, and it's something that I'm telling you guys to watch out for, that we had that kind of market crash price action yesterday right at an area where we could be starting the next bigger leg down in some of these currencies versus the dollar. So again, just an observation, but very interesting observation in my opinion, something to pay attention to. Next is the Swiss franc. Look at this gap higher, this push higher yesterday off the back of what happened with Silicon Valley Bank. This was something I've been highlighting since the beginning of the year, this major double bottom breakout, looking for the Swiss franc to actually perform really well this year. I did post this out at the beginning of the year on Twitter. This was one of my longer term views that the Swiss franc was going to get up, possibly even to 1.17 was the target area that I have overall this year on Swiss franc. And we pulled back, we tested this, and remember what I say to you, this was a major breakout. So a multiple days, chopping around here is nothing but volatility, even one candle on a bigger time frame. Now we've had this break up, a break of here is actually the start of the next trend up in the Swiss franc. So going into next week, absolutely. And this was such a sharp move, don't be surprised to see this consolidate maybe even for a week or two. But any pullback in the Swiss franc pairs should be viewed as an opportunity now to get involved before the major breakout to the upside here. And again, like I said, I think the Swiss franc is heading towards the 1.16, 1.117 area this year. Next is the yen. Again, look at the yen. The yen on Friday was just coming off a BOJ conference, Kuroda's last meeting, where they were once again dovish, talking about yield curve control, keeping the party going. And yet, look what we saw the same day from the yen. That is a flight safety. That's risk off. And when we compare this to what we're looking at in the scorecards as well, all of this is confirming that breakdown in the S&P 500. And that's why I favor risk off setups heading into next week. I do not want to be on the wrong side of a sharper move down in the S&P 500 and risk off plays next week in the currency markets. Next is the CAD. The CAD is heading back down to the lows, and you can see really nice momentum to the downside. Any pullback in this market, I am looking for further declines in the Canadian dollar, and I do favor CAD shorts next week. Next is the Australian dollar. Ever since we traded into this high, I did warn you that I believe the Australian dollar is coming back down to the lows, and we are making our way back down to the lows. Any pullback in this market is simply viewed as an opportunity to get on board that train as we head back down to the major low and possibly lower in the Australian dollar. Last but not least, the New Zealand dollar. I have been warning since the beginning of the year that we were running out of road, and this was the major double top reversal. So again, very similar to what we looked at in the pound. If you look at this, technically speaking, we have only just begun the next leg down in the New Zealand dollar, because here is the double top breakout in the bigger time frame. So any pullback here is simply viewed as an opportunity to look for shorts all the way down to the previous low. I'm not saying this is going to happen next week, of course, but this is the overall direction of travel, and I do think not only do we come down to the low, we could be heading lower. Now, when you put all of this into the context of the breakout in the S&P 500 and the fact that we saw that kind of knee-jerk liquidation in the dollar instead of a flight to safety, these are the pieces of the puzzle that do concern me, that we could be underestimating what happened yesterday with Silicon Valley Bank. And I just question whether we are actually going to see a sharper move down in equities off of this and a flight to safety in the dollar as these markets head back down towards their lows and the dollar back up towards its highs. So just something to keep in mind for next week. But as I say, I did find that price action yesterday quite disconcerting from the markets. Okay, so let's have a look at the markets for the coming week, starting with crude oil. And I do not have any strong bias on crude oil. I've been saying to you for a while, this is not something I have a strong conviction on. It's just ranging, it's just chopping. And actually, this has a decent chance of just continuing to chop next week. If I were going to look at trading this, which next week I probably won't, but I add crude oil into here every single week, any pullback in this market would be viewed as an opportunity to look for shorts down towards the 72.50. Again, this is not high up on my list, and I'm unlikely to trade crude oil next week. Next is CAD Franc. Now, this is right up as one of my favorite setups heading into next week. The only thing to note with the Franc pairs is the move was so sharp. Don't be surprised to see this correct even for 1, maybe even 2 weeks before it starts to roll over again to the downside. However, any pullback in this market, because we do have really nice momentum, any pullback is viewed as an opportunity to look for shorts. And if we get down towards the 0.65850 area roughly, this would be short-term max profit-taking opportunity, because once you get down below this area, the odds start to turn against you for a consolidation or a bounce. Next is Aussie Franc, my second favorite market here out of all these markets, and highlighted in gold as a really top setup heading into next week. Any pullback in this market, and again, may just pull back all of next week, that would be fantastic, because that would be the opportunity to get involved. And even if I have to hold this for over a week, I'm going to be looking for further declines down towards the 0.5980. If we come down to here next week, if we just consolidate and sell off, this would be the max profit taking short-term area I'd be looking for in Aussie Franc. And the final franc pair here is New Zealand franc. So again, another commodity currency. You can see we kind of broke. It's not really head and shoulders, but we did break down here. Any pullback in New Zealand franc is also an opportunity to look for shorts down towards next week, the 0.5580. The only reason this is not highlighted in gold is because of the scorecard system, which puts CAD and Aussie as the best shorts on a 1 month forward-looking basis, so i.e. over the next 1 to 4 weeks. Next is pound CAD, highlighted last week to the upside, and we did take out the target area, and we actually broke through here. Now, most of the time, 7 times out of 10, the market will fail to really break through here. When it does, this is telling you there is real momentum, and this is likely to continue. Yes, we're looking for a pullback first, so you have to be patient, wait for the pullback, and then look for the next leg up. But this was not just taking out the target last week, this was indicative of further advances this week. So any pullback in this market is viewed as an opportunity to look for long setups, and the max profit taking opportunity this week to the upside is the 1.68250 area. Next is pound Aussie, another market which traded into the area over here, and again last week it just ended up breaking through it. Another sign that this market is likely to head higher over the next week or so. Any pullback in this market is viewed as an opportunity to look for bullish setups. And over the next week or so, I am looking for this to advance higher. And if we move into the 1.8550 area this week, this would be the max profit taking opportunity this week. Next is pound New Zealand. I also like this, but again, because of the scorecarding system, it's telling me CAD and Aussie shorts are actually better than New Zealand shorts. But any pullback in this market, generally speaking, would be viewed as an opportunity to look for long setups into the 1.9850 area. And again, all of these are risk off setups that will benefit from a further decline in US equities next week and any flight to safety if it does materialize. Next is EurCad, another market which broke and rallied above its previous target to the upside highlighted from last week. So this market, which was a great trade last week, would also be a good opportunity. It rallied very hard, so if you were involved, this was a great trade. But any pullback in this market would be viewed as an opportunity once again to look for long positions up to the 1.4850 area. Again, if we tag this area this week, that means we're likely, in all probability, 7 times out of 10, you're going to kind of consolidate or start to fail to really break higher. If it does break higher, like it did last week, it's a sign that we're going to continue over the next week or so. And my 6th favorite Forex market heading into next week is EurAusd. Another risk-off move, another risk-off setup, and we did break above the previous target area set. And this just goes to show the strength of that risk-off dynamic we saw coming into the markets last week. We really did break above this. So heading into this week, any pullback in this market is viewed once again as an opportunity to look for long positions into the 1.6350 area. And finally, we have Euro New Zealand. Just remember that EurCad, EurAusd, Euro New Zealand, Eurodollar, these are all subject to the interest rate decision on Thursday. As I said earlier, my base case is that the euro pairs start to move because of the US CPI data. But if they don't, just be aware of that interest rate decision on Thursday. So any pullback in this market, especially if we were to pull back and then we were to get a break higher, perhaps on the interest rate decision, I would be looking for further advances up to the 1.755 area. Okay, so moving on to the dollar pairs, and I would be looking at these dollar pairs post CPI if you want to be on the safe side. So from Tuesday onwards, you can have a look at these dollar pairs here. I do favor the risk off setups, so euro dollar to the downside, US dollar CAD higher, Aussie dollar to the downside. The one market I would be interested in trading in the other direction, in other words, for dollar weakness, next week would be gold. That is my plan B. If instead of dollar strength and a flight to safety and risk off, as equities sell off, if we get the opposite and the dollar is weak, this is the one that I would be looking to trade dollar weakness in. It's in gold. So in terms of euro dollar, any continued pullback is viewed as an opportunity to look for bearish reversals. If you get the CPI data and it sells off like this, you can look for the pullback and the follow through. Down towards next week, the target is the 1.04850. Next is US dollar CAD, highlighted in blue once again, just to remind you that we do have the CPI data on Tuesday. Any pullback in this market, and if we get a pullback and then on Tuesday, we explode higher, you could look for that follow through post CPI into the 1.3960 area. And the final dollar pair here, which again is all based around dollar strength post CPI next week, is Aussie dollar. Any pullback in this market, I would be looking for a break lower, and I'm going to be looking for shorts. And if we can come all the way down next week to the 0.6450 area, this would be the max short-term profit taking area I'd be looking at in Aussie dollar. Okay, so wrapping up the video with gold, silver, and Bitcoin, starting with the gold-silver ratio, you can see the gold-silver ratio absolutely ripping to the upside. And this actually gives us a really nice setup for next week, because I prefer silver shorts versus the dollar on the basis that we get dollar strength, we get some risk off as US equities continue lower. However, if for whatever reason that fails to materialize, instead of trading euro dollar, US dollar CAD, Aussie dollar, and silver on dollar strength, at least we have a reactive plan B market we can come to and trade dollar weakness, and that would be gold. So I do overall, just to be clear, favor dollar longs next week with risk off, but gold to the upside would be my go-to market if for whatever reason that doesn't materialize and we get dollar weakness instead. Okay, so with that being the case, we're going to start with silver, because I do like silver to the downside. And again, like Aussie dollar, US dollar CAD, euro dollar, this is a risk off dollar strength play. Last week, we came right into the target area. It was a great opportunity to book profits. We did bounce, and then we broke through and we just ended up the week back where we initially traded into this area. So coming into this week, any pullback in silver is viewed as an opportunity to look for shorts. And if we do end up coming all the way back down to the 19.60 area, this would be a max profit taking opportunity in the short term in silver. Next is gold. Last week we came down and took out the target set here in gold. So going into this week, we are getting some near-term gold strength, but because of my overall view of risk off and potentially a flight into the dollar, I do not really like gold to the upside, and I don't really like it to the downside because actually it's quite strong, especially relative to silver. So I'd prefer to be short silver than short gold. So what this does with gold is this makes this a perfect plan B setup. If for whatever reason CPI comes out and we get the dollar tanking, then I would be looking for the opportunity to the upside in gold. And I think this previous low, which sits right in the target zone at the 1900, that would be a great short-term target in gold to the upside. Last but not least, we have Bitcoin. Now, I am looking at this on the daily chart because Bitcoin, of course, is a volatile market. So I just want to get more information on here. And you can see last week, in fact, previously I did tweet out, and in the videos here, we looked at the fact that I said this was likely the top in Bitcoin. It did prove to be the top. And we traded into the target area last week. Heading into this week, any pullback in Bitcoin is simply viewed as an opportunity to look for shorts. Perhaps we test the previous low over here. Some broken support turns resistance. I'm going to be looking down towards the 1850 area. I do think overall Bitcoin is coming back down to the previous lows here, roughly at the 15,500 to the 16,000 level. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.